What's up everybody, Aaron here. Celsius updates. I'm going to touch on everything that came through the docket. Sorry for the bad sound. Basically my audio interface literally broke today, so I am using this little lavalier mic connected to my phone. So sorry it sounds kind of janky. I can't use my normal good mic. So let me just dive in, let you guys know kind of what I want to talk about today. Before I do so, I just want to give you the update because some of you guys don't really give a shit anymore about this, which I totally understand. So we are still waiting for the disclosure statement to come out, hopefully by the end of this month, which is, another week or so. Hopefully it comes out then, and then we will know under the Fahrenheit plan how much earned creditors should be getting back. So we are still waiting. There is nothing you need to do right now. So if that's all you wanted to come and see me for, you can go ahead and leave this video. I completely understand. I'm going to dive into the weeds and talk about everything that came through the docket over the last couple of days because there is a lot, and I'll do my best to summarize this in a shorter video. I don't want this to be a long video. So again, nothing to do right now. We're waiting. That includes if you are an earned creditor, which most of you guys are. If you have a loan, I'm going to talk about in this video. David Adler is fighting for you guys. So right now there's a little bit of a back and forth between earn and borrowers, because if loan people get more money, then earn people get less. So there's just this, need for mediation that hopefully will happen so we can get out of Chapter 11. So diving into the computer really quick, I just want to touch on what we're going to talk about. How much did Kirkland and Ellis make? A lot. How much did Alvarez and Marshall make? A lot. Talking about the SEC approving the fees for the backup plan sponsor. That is going to be the liquidation option. Then we have the UCC support the debtors, meaning Celsius's third exclusivity motion, basically making sure there are no more competing offers other than Fahrenheit. We have the UCC's objection to Daniel Leon, one of the co-founders. Basically, he and his wife want to tap into the directors and officers insurance to help them pay for their legal fees. And then we have a lot of information about this directors and officers insurance. Some of you guys have been asking me about this. This is 308 pages, and obviously I'm not going to cover everything, but this basically goes through all the documents for this D&O insurance. Next, we have a creditor like yourself, Victor, who has been pretty vocal, basically also objecting to Daniel Leon's ability to tap into the insurance policy because he believes it belongs to the estate, meaning you, and it should not just go to people that were defrauding everybody and taking CEL Token and profiting off of, everything that went on during Celsius. Then we have the UCC's objection to CEL Token being 81 cents. We have a declaration from Aaron Kolodny of White & Case, the law firm representing the UCC, also objecting to this 81-cent CEL Token. Now, there is a ton of proof that I will talk about in this video a little bit, all about basically how CEL Token was a security and how they just need to give people, the 20-cent CEL and stop fighting for this 81-cent CEL because they're just not going to win. And that's basically the summary of this. And then more about the whole CEL Token valuation. We have a ton of documents and slides just giving more proof about why that we need to just give people 21 cents or 20 cents or whatever and just move on. We have all these exhibits talking about different employees talking to each other about basically doing illegal things with CEL Token. Next, we have Kirkland and Ellis, the debtors, meaning Celsius, also objecting to 81-cent CEL Token, basically like, hey, we just need to agree with the UCC and move on. We also have Elementus, who is a blockchain analytic company, also supporting this 81-cent CEL Token. And here we have David Adler for the borrowers, people that had a loan, objecting to Celsius's exclusivity extension. So I'll cover that as well. And then we have the objection of the U.S. trustee on approving the fees for the backup plan sponsor. This is the liquidation plan, so I'll touch on that as well. So I will include timestamps below if you just want to fast forward to a specific section. So really quick, for the month of March, Kirkland Ellis made or is billing a whopping basically $4.7 million. Alvarez and Marshall for the month of April is billing $1.6 million. So yeah, we need to get out of Chapter 11. Here we have the SEC basically saying that They've reviewed the motion for the backup plan sponsor, and they don't object to the payment of fees. So they don't object, but they also say they reserve the right to challenge transactions involving crypto assets. So they're basically saying, all right, we're good, but we can still come in later if we want to and object to something. And speaking of the backup plan sponsor's fees really quick, we have the U.S. trustee objecting. So basically this backup bidder, BRIC, what they're saying is that this is an insane breakup fee, and they were just merely a bidder at an auction, and they weren't even the highest bidder, and they should not be authorized by the bankruptcy code to get this much money from the estate's funds. He says that if this were to pass, this would open the floodgates for all losing bidders and perhaps uninterested bidders to seek compensation for performing diligence and participating in bankruptcy auctions. So they said there's a vague $500,000 consultation fee, and basically this motion must be denied. I actually had that same thought about how much money Nova Wolf is getting just for putting in some work. And I don't know, maybe the work they did justifies the amount they got, but it was like over $10 million that they got for losing the bid. And I'm like, that is a great business model. You put in some work, you lose, and you make 10 million bucks. So the US trustee is also kind of like, no, this is ridiculous. So next we have the UCC, so that would be White and Case. They are supporting Celsius's third exclusivity motion. Basically, they're saying that Celsius is so close to getting this plan finalized, and we need to make sure that Fahrenheit stays as the primary focus so we don't get sidetracked with other bidders and other plans. They say that Fahrenheit's bid has potentially unlocked hundreds of millions of dollars of additional value, so they're giving reasons why this is a very, very good plan. So here they say the plan should be confirmed by September and go effective by the end of October. And here it says the debtors intend to make a substantial contribution of crypto to account holders promptly after the plan's effective date. So, end of October, they are hoping. Now, as we know that they never hit their timelines, they always go over, but they are hoping end of October, they can then give a substantial distribution of crypto. Now, we don't know what that is. I don't think it's going to be that substantial, to be honest. I know that Celsius has around 47% of our crypto, but that really depends on what happens with people that have loans and how much they get versus how much then people that have an earn claim will get. It has to do with a lot of other factors, so we don't know exactly how much we'll get back at all. And we know that if Fahrenheit wins, some of that money, some of that crypto is going to go into funding this new business. So we don't know, again, how much we will be getting back yet. So they say that extending this exclusivity solicitation period through September 29th is appropriate and necessary. And they do talk about there needs to be mediation between the borrow group and a group of earn creditors. Kind of like what I talked about before. There is this tug of war, this fight between, are we going to get more money or are they going to get more money? Like, which is going to get the shorter end of the stick? And there needs to be some mediation there so we can get out of Chapter 11 and move on with our lives. So now we're talking about Daniel Leon tapping into the D&O Directors and Officers Insurance. So here the UCC is objecting to this process, and they don't want Daniel to tap into the D&O insurance. It gets pretty complicated. I'll do my best to just kind of cover the basics. But basically, the policy potentially affords coverage up to a maximum aggregate limit of liability of just $1.5 million. And obviously, we saw that Kirkland billed 4.7 in just 1 month. So when we're talking about 4.7, 1.5, I mean, really, we just have to get out of Chapter 11, right? So the UCC says that the policy here provides an exclusion for any loss arising out of any, quote, deliberate, criminal, or fraudulent act. And the D&O policy also excludes any loss in connection with any claims arising out of the ICO, that's the initial coin offering, of the CEL Token. Here the UCC says that Daniel Leon should not be able to seek relief from this court and use proceeds of the D&O policy to fund his defense. The UCC says no, he should not be allowed to do that. And then, get this guys, hide in Israel and avoid the obligation to repay such proceeds if the litigation does not go his way. And he is found liable for conduct that is excluded from the policy coverage. So very, very confusing, but basically the UCC is like, he should not be able to tap into this and then go hide in Israel and then run away from problems if they come later on. And this is very important. So any amounts of money advanced or given to these directors and officers for their defense costs will directly reduce the amount of coverages available to the debtor's estate under the policy. Such proceeds are property of the estate. So this means basically any money that Daniel or Alex or any other directors and officers get from this insurance policy is money that we will not get back as earned creditors or people that have a loan. Basically, that is money that will not go to the estate. And the UCC says here that the policy is property of the estate. Next, we have 308 pages, which I am not going to go through because that is ridiculous, talking all about this insurance policy, this directors and officers insurance policy. This is way above what I want to dive into. Sorry guys, not going to go into 300 pages of this, but anyway, there's a lot going on here. And here we have Victor, another creditor like yourself, also objecting to Daniel Leon. I kind of like what he says. He sums it up in non-legal terms. He says that Daniel Leon, a founder of Celsius, sold at least 2.6 million CEL tokens for at least $9.74 million. And he says that the same people that were taking money and doing some dishonest things, they are now requesting money that the estate has an interest in, meaning that this is like your money. And that is property of the estate, kind of like what the UCC said as well. So basically, he says that Daniel Leon should not be getting this insurance money. So now we're talking about CEL tokens. So just to give you a little bit of background, the UCC is basically saying that CEL is going to be given 20 cents, not 81 cents, because mostly that it was a security, that it was pumped technically illegally by a short squeeze after the pause, because they knew that it was going to be dollarized at the date of petition. Possibly this was led by insiders, we don't know. But the UCC really lays the smackdown, that shows my age, lays the freaking smackdown and gives so much proof about why they just need to accept their 20 cents. They need to accept their 20-cent CEL token and STFU and just go on with their life. You know, personally, I'm a little bit torn because, and they do talk about this, there's a lot of innocent people that believed Alex and believed all the directors and officers, everybody, you know, basically buying CEL token on the open market or doing over-the-counter transactions. And not everybody, most people that had CEL token were not insiders, right? I understand that's incredibly frustrating if you just bought into the whole Celsius flywheel model, and that's what they talk about. And unfortunately, like, it's giving CEL token holders the ICO price because they have a claim, or the UCC can prove maybe that, you know, maybe they should get nothing. So they're basically saying, hey, we're going to go between nothing and 81 cents. We're going to give them the ICO price of 20 cents. Here it says that Celsius admitted that CEL token is a security and have consistently treated it as such. At the date of the pause, approximately 95% of CEL token was locked on the debtor's platform. So that would be on June 12th. That is the pause. So that is like a month before they declared bankruptcy. And between the pause and the petition date, the price of CEL token went from 20 cents to 35 cents to 81 cents, and that was really because of this whole CEL short squeeze. At least that's what they're saying. The UCC is asking FTX for some information about reported large short positions. So there's just a lot going on, but ultimately they said the proposed settlement, meaning this 20-cent settlement, would avoid the need for costly litigation that could result in creditors holding CEL tokens obligations receiving nothing. So the UCC is like, guys, stop trying to fight this. Take your 20 cents and move on, because this will cost the court a ton of money. It'll cost the estate a ton of money, and you may get nothing, right? So here they say that CEL token holders chose to invest in a token whose value was tied to the continued operation of Celsius. They knowingly accepted the risk that if Celsius failed, their investment would likely have no value. And, you know, over the years, I was buying CEL token, and that's exactly why I was buying it. I was buying it because, well, it was going up, and I was buying it because that was tied to the success and the AUM and the value of Celsius. At least in my mind, I think that's why most people were buying CEL token, because Celsius we thought was going to do incredibly well. So they give a lot of really great information here, but they talk about the CEL token flywheel and how that worked. They show again how much CEL token insiders have, Alex having 70 million, Daniel Leon 15 million or almost 16 million, Nuke having about 9.7. We have Alex's wife, 2.1 million, and a couple other people with several 100,000 CEL token. So here it says the Celsius team took direct efforts to increase the value of CEL token including purchasing the token to support, or more appropriately pump, its price and burning tokens to reduce the supply. Both buybacks and burning tokens have been identified by the SEC as clear indicators that an interest has an expectation of profit based on the efforts of others, aka it was a security. So they are really trying to prove that CEL Token was a security. Now, this isn't looking good for people that were manipulating illegally a security. So there is a lot of fight going on, and Simon Dixon talked about maybe what's happening behind the scenes, maybe what some of these insiders like Alex, or I should say, founders like Alex and others want to do. I mean, ultimately, they are going to do everything they can to prove that CEL Token probably wasn't a security. They want to prove that it wasn't because there's a lot of proof that they were manipulating such securities. So that's kind of what's going on behind the scenes here. And I just want to pause before going on to the next story really quick. So I've been making videos on Celsius for years. I was a fanboy. I was a believer. I was, one of the community. And when they started to do this burning of CEL Token, I did have the thought of is this legit? Can they do this? And then they were like, well, Binance is doing it and other companies are doing it. So I was like, screw it, it's fine. But as someone who has CEL Token, I was like, great, do everything you can to pump the price up. So I just want to make that clear and not come across like some arrogant douchebag saying that I always knew that they were doing illegal activities. But in the moment, I was rooting them on because it was like pumping my CEL Token bags, which everybody who had CEL Token was rooting for that. So now we have this insanely long document, more proof from the UCC, specifically Aaron Kolodny. He's a lawyer at White & Case, basically to take this 20-cent CEL and just stop fighting for this 81-cent CEL. So there are just a lot of exhibits here, a lot of exhibits with proof of over-the-counter transactions. They have conversations with different members of the team, basically saying things that are pretty incriminating. So they have a lot of different conversations. This one's from 2020. This is Johan Treutler saying that I'm concerned about CEL. Alex is selling every day, 120,000 CEL yesterday, 120,000 CEL the day before. He's the biggest seller by far and depressing the market. And they're like, yeah, he's selling $165,000 worth of CEL every single day. And they have all of their internal Slack meetings and everything that went down. So next we have just more information from White & Case. I mean, again, this is just like hundreds of pages, more information about CEL Token. So they are really doing this insane argument. I think it's just to basically, again, get them to accept this 20-cent CEL, and this whole CEL 81-cent ad hoc needs to disband so we can just get out of this chapter 11 and stop fighting. I really think that's their main objective here. And then we have Kirkland and Ellis. This is the law firm literally representing Celsius, supporting the UCC, saying take the 20-cent deal, stop fighting. Here they say the price of CEL as of the petition date was attributable in part to the debtor's purchases on the open market. But after the pause in June, the market price of CEL increased, ultimately settling at that 81-cent price on the petition date. The debtors, meaning Celsius, have heard arguments that CEL should be valued at 81 cents, and also that it should be ascribed no value, meaning $0, 0 cents. Valuing CEL at 20 cents represents a middle ground that provides value to those CEL holders who took no part in the debtor's pre-petition actions that were illegal, most likely, regarding CEL Token, and those account holders who did not hold CEL and would otherwise be diluted, meaning get lower recoveries as a result of a high CEL valuation. So they're saying that this 20 cent is the middle ground between 0 and 81 cents. So Kirkland just comes out and says, yeah, 20 cents it is, we need to move on. And finally, guys, we have the ad hoc for the borrowers, David Adler, objecting to the debtor's exclusivity period. So what David Adler is saying, that there were a few issues related to taxes that they hadn't agreed upon, but these negotiations, which had been ongoing for months, he said, came to an abrupt halt. He said there was radio silence to the ad hoc group, which continued until June 13th, 2023. So what the borrowers don't like is that they will be receiving what's called a set-off treatment. Essentially, the plan seeks to set off the debtor's claim against the borrower, meaning the loan claim, and then treat the remaining claim as basically an earn claim. And he says that this treatment is basically inconsistent with consumer lending laws. So from my understanding, what the plan wants to do to people that had a loan is that you take your loan amount. So let's say you took a $10,000 loan, but you gave them $40,000 as collateral. You would basically subtract, $10,000 from $40,000, and then you would have a $30,000 earn claim. I could be wrong about that and have that completely wrong, but that's just kind of what I think this means. But ultimately, David Adler says that if this exclusivity period is accepted and granted by the court, it should be limited to 60 days or August 31st. So David is basically saying that, hey, we have not been communicated with, we have not been treated fairly, and we just want to limit the amount of time that they have to get this plan going. So guys, that is it for the video. I'm gonna leave some affiliate links below. The one I'm super pumped about recently is Fold Card. So they are a Bitcoin back debit card, and they are giving you guys 50,000 Satoshis when you sign up and use it. That's something like, I don't know, $15, $20 or so, depending on the price of Bitcoin. What I like about that is you can get 1% Bitcoin back on all of your utility bills, like your mortgage and things that require like a bank account. Basically, you can connect it to PayPal. So this is just for people in the United States, but that's one I'm pretty excited about because, getting money back from paying your rent is pretty darn cool. So thanks for watching, guys. I am coming at you from the Salt Lake City area. I didn't mention that earlier, but if you made it that far, now you know where I am. I am in Utah, and so I'll keep you guys posted. Till next time, talk with you soon, and bye for now.